Well, good afternoon. It is time to get started. I am excited to be with you today, and I wanted to make sure I didn't have any technical difficulties, so I had the show running on another screen, and I just wanted to shut that off so we could get started. So first of all, thank you so much for taking a few minutes out of your very busy day to come and join me. I want this information to be informative, and I want you to learn a few things that will help you make sure you get your houses closed with zero problems and zero frustration for both you and your potential buyers and or sellers for that matter, because the information should be useful to everybody. So without further ado, let me start my presentation. I'm going to jump in here and share my screen with you. Okay. There we go. So hopefully you can see the screen now. If you can see the screen, you should have up the title, which says 5 Ways Insurance Can Blow Up Your Closing and What You Can Do About It. So first of all, I want to tell you just a very quick background about me. I'm not sure if you have been in one of my classes before or met me before, but I just wanted to give a little oversight as to who I am and who my agency is. So I'm the owner of O'Connor Insurance Associates. We opened our doors in January of 2000, so we've been in business for just over 17 years. We are located in Charlotte, North Carolina, but we serve the greater Charlotte area. We have clients the whole way from Mooresville and even into Greensboro, Cary area, and the whole way down into Waxhaw and into South Carolina and Rock Hill as well. We are honored to have been in the Independent Agents Best Practices award winners since 2010. We are an independent insurance agency, and what that means to you is that we are able to represent more than one insurance company. So we have a plethora of insurance carriers that we have carefully chosen for their service to our clients, and we are able to best match the insurance carrier's product with the needs of the client and make sure that the client is getting the most insurance for their money. I do have a team of professionals at my agency. My husband and I own the agency together. He does all of our commercial insurance, so he's in charge of general liability, workers' comp, commercial auto, all those good things. And he has a lady on his team that helps him. And then we have a personal lines team that is led by me, and my personal lines account manager's name is Steve Wesco, and he's been with me since 2004. And we also have another team member named Stephanie who helps our clients as well. So we are not your typical insurance agency. Usually when you think insurance agency, you think of something that maybe, you know, a typical setup from your grandma's age or your grandpa's age or maybe even mom and dad. But we are not typical. Why we are different? Number one, we believe in education. So our goal is not to just get information from someone as fast as possible and then hang up the phone. Our goal is actually to educate them in every interaction. So this webinar series is an attempt to do just that. It's to help you educate. And by educating you, we hope that you will, A, close more sales with less aggravation, and B, you'll be able to pass some of this good information along to your clients as well and help them to make good informed insurance decisions. So if you have any questions either during the webinar or at any other time, here's my email address up on the screen. It's super easy, Michelle with 2 L's at oianc.com. Just go ahead and shoot me an email and I will answer them all while I'm on the call today, or if you shoot it to me later in the day, I'll be happy to answer you then as well. So let's get started. 5 ways insurance can blow up your closing. Number 1, the claims that your client has are very important. If your client has a history of turning claims into the insurance company, it can be a major problem for your closing, especially if you weren't aware of it and or if your client didn't contact their insurance agent in a timely manner. So the general rule of thumb is if they've had 2 or more claims in the last 5 years. Not a hard and fast rule, and it's actually every situation is different because of the types of claims, the situations that might have surrounded the claim. But some claims that insurance carriers don't like, number one are water claims. They're not a fan of water claims, particularly if it was something that could have been a maintenance issue that maybe could have been prevented. So that's the most important part. But if it's something like a catastrophe, it might not have as big of impact on your client as well. So if they had 2 claims, let's say one of them was a theft, and one of them was in fact a catastrophe where they had a hurricane, that blew through and their roof blew off, then we might be able to do something a little bit different with them. Also, the type of claim is very important, like I just mentioned. If it is a catastrophe, the insurance company will look at it with a little bit more forgiveness than if it was something that perhaps could have been prevented either because of negligence, like someone leaving a pot on the stove that catches fire, or maybe it was because they weren't locking their doors and someone broke in, something like that. So those things are definitely taken into account as well. So number 2, the second way that a closing can blow up is a claim on the house that your client is purchasing. So not just one claim is going to be an issue, but really what we're talking about here is multiple claims. And let me give you a couple of scenarios. So if the house has had multiple instances where they have had water claims, perhaps a roof leaking, perhaps toilet leaking, number 1, it's a red flag for you as the realtor to say, we definitely want to get this checked out and make sure that the damage has all been repaired, particularly when it's water, because if it's into the subfloor or mold could have been a factor, you want to make sure that it was cleaned up and cleaned up properly so it doesn't present an issue for the homeowner down the road. The other portion of that is, let's say that the claims were that lightning struck the house. We had some pretty horrific lightning in the Charlotte area last night. If a house has gotten struck by lightning more than one time, there's a very good chance that the house hasn't been grounded properly. So that is also a red flag because it will likely happen to your client once they move in if the situation isn't resolved. So that's a pretty good indication. Other than that, it won't potentially blow it up unless the damage either hasn't been repaired or the insurance company feels like the house is just prone to it, like the electricity claim, because it hasn't been properly grounded and nothing's been done about it. So we went over the first 2 ways. The next way that a closing can blow up is if updates have not been done on a home. So the general rule of thumb is that both the roof and the HVAC, the plumbing and the electric, all have to have had updates done on them in the last 25 years. So if you have someone purchasing a home that's over 25 years old, the roof and the HVAC have to have been replaced. The plumbing and the electric have to have had updates done to them. Generally speaking, when the HVAC system is replaced, the electric also has updates made to it at that time to make sure that it's got the proper ampage. Some other things on older homes, and certainly you won't find this on anything that's newer, but on an older home, the insurance company also has to know that there is no plumbing that has polybutylene. An inspector would be the one that would probably figure that out, but any polybutylene piping has to have been replaced in the home. And the electric cannot be circuit breakers. And there also has to have at least 125 amp service, which if a house has HVAC, they have to have that much amp service. So that becomes a non-issue. But really, we're just talking about an older house. I've had this happen a few times when clients were potentially going to update them when they purchased something in one of our more trendy neighborhoods, but it's an older home. The insurance company is pretty funny about those things. So we have some ways that we can take care of it for them, but we definitely have to get all that information in advance. and we don't want to do it at the last minute because we need time to talk to the insurance company and make sure that we have a good plan together with the buyer. So we talked about 1, 2, and 3. Number 4 is occupancy. Now, if you're in the mortgage business, you already know this to be a factor because in recent years, this has become a really big deal. But how the home is going to be occupied is also an issue for insurance. And it can blow up at the last minute if all of a sudden the buyer says, oh, we're going to be using that house on VROB, for instance, or we're going to lease it on a month-to-month basis during the summer months because it's on Lake Norman and it's beautiful. Or we're just going to rent it in general. We're going to have a tenant in it all of the time. All of those issues, when the buyer is not going to be the occupant of the house, cause hiccups in the insurance process. So the more time that we have to get that settled, the better. In addition, if it's going to be listed on one of the short-term rental sites like Airbnb or something like that, the insurance is much more expensive. It's not the same type of product either because it's a rental situation versus an owner-occupied situation. And the insurance company doesn't feel like a tenant will take nearly as good of care of the home from a maintenance perspective as an insured would. Somebody that owns the home is going to be far more likely to take good care of it. So those things can all present issues. It can even present an issue if it's a second home for the buyer, if it's not going to be their primary resident. The type of policy that we're allowed to offer and even the cost in some instances can be different. So it's super important that we know that information upfront and that the buyer has been upfront with us about that. So we've talked about the top 4. Let's bring it home with number 5. This is the big red question mark, or in this case, multiple colored question marks. What you don't know about your buyer. There's all kinds of things that can present hiccups at the last minute, none of which you would likely know. However, these are some of the red flags that you might listen for. The type of dog that the buyer has can be an insurance issue. It can be an insurance nightmare, as a matter of fact. Almost every insurance company that I'm aware of, with the exception of maybe one, has an issue with certain breeds of dogs. The main breeds are ones that you would be most familiar with: Pit Bulls, Rottweilers, Shar-Peis, Chows. Those types of dogs have a propensity for violence, and when they bite, they have a particular mechanism in their jaw that locks their jaw, and that causes a lot of injury to whomever they bite. So those are on the no list for most insurance companies I'm aware of. Any dog that has ever bitten in the past, that is also on the no list for almost every insurance company that I'm aware of. So what do you do if you have a buyer who has a dog who has bitten somebody in the past? Well, the one thing is that we're going to have a different type of homeowners policy. It's not going to be the same policy that we would be able to provide for them in another situation. And in addition to that, it's about 3 times as expensive as what they might have been expecting. So again, those are just some things that we would need to talk through with them, but it could potentially cause an issue at the closing if they were expecting their mortgage to be one thing based on an estimate, and then all of a sudden after they talk to the insurance agency, now they're going to have to add, $400 or $500 to their monthly payment. That changes the landscape in a big, gigantic way. Something else is if they conduct a business from their home. So most businesses are pretty standard. We own an insurance agency. We have an office in our house. We go back and forth all the time between our home and our office. Not a big deal. We don't have clients on site. However, if you have a client that is running a daycare out of their home, that could potentially be an issue depending on how they're taking care of it. Maybe you have a client who wants to have an auto repair center in the back. They've got a spare building that they plan on doing that with. Not that would close it or eliminate them from being able to get homeowners insurance, but it presents a different conversation, and we often need a little bit more time to gather information and make certain that it's all done correctly for them. And then again, there's the cost too, because it could be more expensive. Certain hobbies can just change the landscape of the homeowners insurance. So if you're talking to somebody and they tell you that they have an art collection, they're probably well versed already, but that art collection would likely need to be scheduled on their policy differently. And that could present a challenge as well, just in making sure that all the documentation is done properly before the closing. It can also create a little bit of an additional expense for them, but they're usually well aware of that and willing to have that extra expense since they want to make sure that it is done properly and that if there is a claim, that it's handled properly as well. Last but not least, you are all probably fairly well aware of this one, but any home that is in a floodplain typically needs a little bit of additional time and energy. The floodplains need elevation certificates. Depending on where the home is located, there can be some additional things that need to be taken care of. And of course, there's always the added expense. Most mortgage companies won't close on the home until the flood policy has been put into place. And so again, it's just one of those things where we need a little bit of additional time to make sure that it's all taken care of and taken care of properly. So what can you do? You can keep calm and call your insurance agent. Yep, that's right. That is the very best thing that you can have your client do is call your agent. Now, of course, I didn't do this whole presentation to just get to the end of it and say, okay, you have to tell them to call their agent. The reason I did the rest of the presentation is so that you're made aware if you hear or see any of those red flags that you know they need to make sure that an agent is involved right away. A particular home that you already know has some claims on it, we probably want to talk about that right away with the client to make sure that if it's going to be a negative and the client is not going to be able to get standard insurance on the house, that they're aware of that before they put an offer in. That will prevent a whole lot of heartache down the road. You can also understand your buyer's plans. Like I said, if they're planning on doing something with the home, like renting it or putting it on Airbnb, that would be something that would be a good idea for you to know. If they're also thinking that they might want to start a garage out of the back storage area, an auto body shop, something like that, that is also something that you would want to know about. So you can just listen for information like that and make sure that they're aware that it could change the landscape of their insurance, and then make sure that they're speaking with their agent right away. In addition to that, we are always here as a resource for you. So if you have a question, give us a call. If you think something could be a problem, give me a call. If you're looking at a listing and you're about to take a client to it and you notice something on there that you think could be a particularly odd hazard, just give us a call. You can also shoot me an email. Both my contact information is on there. As I mentioned when I started the presentation, I do have a team of professionals, so please don't be afraid to talk to Steve or to Stephanie at the office. They're a wealth of information as well, and they can often get you an answer back even quicker than I can. So you can reach out to us in either way. Please don't think there's any obligation for us to speak with your client. We can certainly give you information and try to help you out. And then, you know, that would, if that's a plus for you being able to get something closed or taken care of, that's the only motivation we have to make sure that you're taken care of. So with that, that is the end of my presentation, and I am going to bring my presentation to a close here. And it looks like we're having a little technical difficulty with the actual screen sharing. So instead of seeing my lovely face, we'll just close here at the end with my last screenshot in my slide. If you think of anything today or another day, again, please don't hesitate to reach out to me. Thank you so much for taking a few minutes of your valuable time today to listen to this presentation and watch it. If you have any other feedback, I'd love to hear it. And if there's a topic that you're interested in and you would like for me to address it, I would love to do another webinar. Thank you so much. Have a great day. Bye-bye.